And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. Today is Tuesday, September 21st, depending on which calendar you look at. It's the last day of summer or the first day of spring. Anybody's wondering where the volatility came from yesterday, if you saw that full moon out last night, that may explain a little bit of it. My name is John Hoagland. Thanks for trusting me with your time. As always, we're going to be looking for your accurate context, good risk management, and infinite patience. And I think we're going to need some infinite patience this morning. 7:30 this morning, the housing starts and permits came out, both beating expectations. Perhaps a little break in the price of lumber has something to do with that. But as we're all, I'm sure, well aware, the FOMC meeting begins today with the release tomorrow at 1 p.m. Central. Equity markets are attempting to recover much of yesterday's losses as the perception grows that major central banks have pushed back timing on monetary tightening. Perhaps. Analysts are also scrambling to quell fears about China's assumed Lehman moment with this Evergrande situation. And we got some news apparently last night or yesterday that some of the production impairment in the Gulf from the storms may go all the way into next year. So crude oil being somewhat supported by that this morning. As always, make sure you like, share, comment, question, feedback, and heckle at will. Subscribe to our YouTube channel so you get notifications when we do go live. Taking a look at the VIX this morning, it's down about 8% as equities recover. Of course, VIX is going to be moving to the downside. 23.54 last I checked, and the dollar index trading 93.12. Just remember, we do have the FOMC meeting tomorrow. I'm kind of expecting some of our markets to fall into a, what do we call it, a hedging mode, a situation where major players are going to just be hedging themselves against what might happen tomorrow. We don't know what's going to happen, of course, but it could be a big goose egg. It could be a big deal. We don't know. So I'm going to, again, try and stay patient today. And I know there's a lot of expectations for some big moves and things today, but just knowing that that FOMC meeting is tomorrow, keep calm and chill. Take a sip of coffee. Yeah, good morning, everyone. All right, we've got Brian, first one in the room again this morning. You win the prize, Brian. Theo, good morning. George. Janus, Vince, good to see you. Jimmy Decker, Steve Lee, Frederico, Drew, good morning. Bill, Ryan, my brother Rick, good to see you this morning. Journey, good to see you. Andre, George Adams, Clarence, good to see you. Tyson, good morning. Zerain, Subconscious, Laura, good morning. Greg H. Cam, good morning. Jim Wolf, Spencer Rhodes, Deanna Floyd, good morning. Ryan, Trading Research, Robert, Nick Nichols, first day of fall. Yep. Let's do this. Hope everyone was safe yesterday, didn't overtrade. Boy, that I certainly hope that. We're looking forward to success. Angelina, good morning. Keith, good morning. James, Michael H., Spencer Rhodes, everything looks directionless heading into Wednesday. Don K., good morning. Mustafa, hello. UG, Adrian, Jason Cargill, KM, Kestudis, Kestudis Statkis. I hope I didn't tear that up too bad, Kestudis. Jerry is awake. Hopefully John is too. I see some possible new names here. Welcome to the Market Forecast. If this is your first trip to the Market Forecast, we're hoping to help you find success. This today on Futures 301, we're going to just nick the corner off of technical analysis. Technical analysis is a huge subject that we could spend weeks, if not months, covering all aspects of it. We're going to just take a look at a few things, and I'm going to have some suggestions for you to continue your quest for knowledge in technical analysis. That's at 12:30 today for Futures 301. The link is in. Daniel Jardin, good to see you. I'm also going to put in group coaching, which is tomorrow at 1 p.m., just the same time the FOMC information comes out. So what I'm going to do is I'm going to start the group coaching at about 1:05. So at least we'll have the opportunity to see what happens, see if there's any good knee-jerk reactions that we may be able to respond cognitively to. It's probably, it's likely it's going to be an emotional move tomorrow. Lots of sore toes, if you will. Lots of speculation as to what's going to happen. It may be nothing. It may be a big deal. We don't know. Again, we're gonna give everybody at least 5 minutes with which to see if there's any response that they want to do before starting group coaching tomorrow. So Jerry, Daniel, the beautiful Savage AK, Mr. Crypto, good morning. That's a heck of a good name there. Trading Research, I sincerely hope you're saving these recordings for when they can be made available. I haven't been able to make any of these sessions. Trading Research, this is really a first time through. We are going to be doing this again and probably again, and recording the next time through. We're looking for improvements as we go along, suggestions, feedback, and all of those things. We're going to include everything that we get as far as feedback is concerned, and we'll be doing them again. So there will be opportunities to see it again in the future, and hopefully it will be available to everybody. But again, first time through, we're going to be improving it over time, and it will be available to everybody in a recorded way at sometime soon. I'm sorry that you've been unable to reach some of them or all of them. Cam, appreciate you coming. Jimmy Decker, what is the web Zoom link? The web Zoom link for 301 and group coaching are just above your comment there. They're the yellow that says Top Step. Those are the links for the registration for both. Good morning, Tanya. Pleasure to see you. All right, so let's do what we're here to do. Let's take a look at the charts. I do have them stable this morning, which is a blessing. We've had a little bit of technical issues this morning already, but we've already worked our way through those. Let's take a look and see what we're seeing on the daily in crude oil. Just getting things set up. Let's take a look. All right. So crude oil is finishing rollover. We've got natural gas, which is in rollover. Will probably be rolling over as far as the volume is concerned. Tomorrow, Thursday or Friday, we'll be keeping an eye on it. As far as I've seen this morning so far, the volume in the October contract in natural gas is still there. So we'll be watching to see tomorrow and Thursday when that starts to roll over. All right, as far as crude is concerned, we had what was looking like in a inverted head and shoulders here. Now, this is usually going to be a reversal pattern, as our good friend Fred Deckard pointed out. It's not really representing that here, is it? It's more of just a kind of a, we've moved up to this level. This would be a level that we would move down to more than up to. So we're just kind of watching here. We had this shoulder, this head, this shoulder. If it was really going to play out, it would play out up to here. The measured move for this is all the way up to around $77, $76.50, $77. We knew we were going to have trouble getting past these swing highs. It is last week's high. We are kind of range bound here now. Is that partially due to the finishing of rollover? I think that the neckline that we put for our head and shoulders here was supportive for us yesterday. I think that the open interest, which was a loss of 18,000 contracts yesterday, is still a bit of a rollover spell, if you will, although it is not supportive of a downside auction. So we're, from the low here, we're still putting in higher highs and higher lows overall on the daily chart. Today we've got an inside extended trading hours range from overnight, probably looking more towards leaning to short time frame control today than anything directional from our longer time frame traders. Again, FOMC tomorrow may be affecting all and any products. So taking a look at where we are on the 30-minute chart, we opened with a gap. We closed the gap yesterday. Today, we've got some overnight longs that started to reconcile around the beginning of the London session. We're opening in range and in value. We are looking for information from the EIA this afternoon. Last week's EIA was a drop of 5.4 million barrels. Tomorrow, the EIA is looking for a draw of 2.4 million barrels, and our crude stocks continue to get lower and lower here in the U.S. We haven't been down to this level in quite some time. Again, we're still fighting with the fundamental information, demand versus supply. Supply seems to be a little bit thin. Demand also seems thin, which has got us kind of holding pat here. So overnight longs reconciling back in the center of value. Stay patient today. Odds are so much greater that better trade locations are going to come as the day goes on, opposed to right at the opening, because of the fact that there's very little change in the perception of value in a barrel of crude oil right now. We've opened right in the middle of range and value. Angelina saying, watch 2 hours of Bloomberg in the morning. Most banks are saying it's not a Lehman moment. Yeah, that's really a lot of folks are scrambling to say, hey, this is not that big a deal. And everything, Spencer, I mean, we all have to take everything with a grain of salt. Nobody knows anything for sure. Drew, huge open interest change in the NASDAQ and ES. Yes. The settlement, quadruple witching was Friday. All of the contracts that were still outstanding. Here's the E-mini S&Ps. I was going to talk about this morning. Every rollover in the S&Ps, there's around 500,000 contracts that expire and settle in cash. So not all the contracts always roll over. Last rollover, I think there was just under 500,000 contracts that settled in cash. This time it's, we lost 537,000 in open interest yesterday. Only 5,400 of those were the December contract. So that was basically yesterday they settled all of those contracts in cash. So whatever your position is, let's say you were short up here at 44.80, the settlement price where your profit was taken yesterday. If you were long higher, you were paying. If you were short higher, you were receiving. Okay? So, yeah, the big jump or a big drop in open interest was expiration. All of the open contracts settled in cash last night. So, here we go. Big down move. We closed below weekly kickoff low. Well, is the Fed going to come to the rescue? That's the question. End of roll, open interest lower on the down move. So in other words, the December contract that we're trading lost 5,400 on this move to the downside. So it wasn't like there was a big pile in, get short event on this move to the downside. That can be good or it can be bad. If we did all pile in short and we start to move this market higher, all of those shorts are going to get squeezed to push to the upside. We didn't do that. We do have some excess here on the daily chart. We did close below the weekly kickoff low, but with new information, like some more dovish talk from the world central banks, I understand that Britain has decided they're going to hold off on any changes. So, maybe the U.S. is going to do the same thing. Maybe seeing that what this was doing to the marketplace is going to have them push off some of the monetary tightening that they're talking about doing, and I think that's probably why we've kind of fallen into an inside range. We have excess on the daily chart down at the bottom here. We did get to a 5% correction off the all-time high. FOMC is going to be vital. I'm watching today for more range-bound hedging activity. I'm not looking for anything huge because we do not know what's going to happen tomorrow. So, where are we opening? Well, let's take a quick look. We have settlement here, 43.48 quarter. We've accumulated some overnight longs that seem to be reconciling here before the open. If we open in range and value, I'll probably be a little bit more patient. We've got weekly kickoff low here, which is 43.53, which was a stumbling block for us yesterday. Moved back up to it and above it, brought it back to a supportive level. What's going to happen? Who knows? If we open with a gap, that could be important information. If we open inside range and value, I'm again going to stay very patient, wait for some extremes to establish themselves in the day time frame and focus on those extremes to find fish. We do have a substantial gap left from Friday to Monday. We've got more visuals, of course, below the market than we do above the market. In other words, naked points of control. Those are going to be important only when they become important. So this morning, I'm going to try and stay patient, opening probably inside value. If we reject value very quickly yesterday, that might bring us to a gap close and a potential repair type of situation. We've got point of control from Friday up here. We've got point of control from yesterday here. So I'll be looking to find some fish perhaps at point of control. Weekly kickoff low, settlement, a little bit of convergence here. Might be an opportunity for us there. But again, I'm not looking for any huge moves today because I think a lot of our bigger traders are going to be hedging and positioning themselves for anything that might happen tomorrow. And again, it might be just a big goose egg. Same situation here in the NASDAQ. We've got a much bigger deep dive below weekly kickoff low, but weekly kickoff low, this was if we were to look at this is a weekly kickoff low that was left behind already by the S&Ps. S&P weekly kickoff low isn't quite as tight to the upside as the NASDAQ. The NASDAQ's been presenting as stronger. It has been holding stronger. This is its first break. And again, we're still looking at this 50-session exponential moving average that both of them did break through and close below. We haven't seen that. Okay, here's the last time there was a close below that 50-session exponential moving average in the Nasdaq. So the open increased in December in the Nasdaq. We lost 52,000. That is the settlement. Okay, all of those positions were settled in cash. We added 1,800 in open interest yesterday to the downside, or was it on the move back to the upside? Really is the question, and we don't know that. FOMC moves are going to be critical. Range-bound hedging activity likely. What are we looking at? So we had weekly kickoff low, stutter step on the way down. We opened, we tested to it, we tested lower. We found some buyers. Overnight, we moved back to this level. It is still providing a level of resistance, and I will treat it that way if price gives me that opportunity to limit my risk at that level. Okay? It is still an unchecked point of control as well as weekly kickoff low. We have last week's low here. We have, that is not last week's low. I don't know why these seem to keep moving on me. So last week's low here, opening in range and in value. Try and stay patient. Again, we might be more short time frame controlled as our longer time frame traders try and jockey for position and hedge themselves against whatever might happen tomorrow. So again, I'm looking for, and I've been wrong before, and I'll be wrong again. I'm looking for somewhat range-bound hedging type activity in our equities today. Take a look at gold. Gold is finally showing some signs of life, although we did lose 6,800 in open interest yesterday. So we got volume and open interest slowing. We're centrally located between weekly kickoff high and weekly kickoff low. We had a potential reversal pattern that isn't truly a reversal pattern. It was the head and shoulders we were looking at, which would have terminated down at the weekly kickoff low here, which is 1722. We see the market kind of recovering again yesterday, losing 6,900 in open interest. That's a pretty big number for gold. What is it? Well, on an up move after a down period of time, short covering. We had some short covering yesterday, and it makes sense. Equities were on the cheap yesterday. There was some fear in the marketplace, and gold has typically been a store of value when fear comes into the market. Historically, we've moved to gold and bonds. Now, 10-year did rise yesterday as far as price is concerned. The yield remains pretty much the same. So, because of the location where we are, I'm thinking short time frame control. I think we've got some space around us before we're going to push longer time frame traders into the marketplace. This morning, it appears as though we've opened with a gap. Okay, and we do not have a gap close. We've tested to this point of control, which was right in the middle of a gap from last week. This was Wednesday, Thursday, Friday, Monday. Here's today. So we are up in this gap, and if we start to go and close that gap, it's a technical thing. It's just something that markets do. We've just tested to this point of control. We've got another one up here to go and close the gap. Would be a function of the market. The market is probably going to, at some point, go back and look to close this gap, see if there's any more business left to do up there. If not, that means we'll have a gap close, and that gives us more information. Again, we've got the opening range, I believe the low of the session. It was a really big opening range, which makes it more difficult, and we have not yet closed the gap. Gap rules state if we can't close the gap relatively early, I realize that is a subjective term, then we look for opportunities in the direction of the gap, which would have us looking to the upside to perhaps close this gap to go up and recheck this naked point of control. All right. Let's go quickly through the euro, the 10-year, and the natural gas. Still doing a lot of research on that. We're going to start getting more and more into that as time goes on. It's a very popular product, so we're going to add that. Euro excess on the daily chart here. Excess low. This doji leaving that shadow at the bottom there says, all right, we're getting a little bit too cheap. We added 5,600 in open interest on that move, but on lower volume. That addition of open interest, was that on the downside, or was this when we found rejection and closed back in the previous day's range? If that was taken in on the up day, there might be some new buying coming into the marketplace. But again, we're relatively centrally located between weekly kickoff high and weekly kickoff low. We have some overnight longs. We do not have a gap. We have an attempt to reject value from yesterday to look at points higher. It looks as though that has been rejected. I'm going to not be looking for longs until this market gives me a better trade location. And again, knowing that short time frame traders may be in control, value low of yesterday's range looks like opportunity. If we're going to accept inside of value from yesterday, this might be this might actually be a pretty decent short, but it's not going to be a real long-term short. I'm going to be looking for the opportunity to cover that short near value low. Opening outside of range, acceptance in value brings probability that at some point in the session we may see price reach the other extreme of the previous day's value. The 10-year. There's that. All right. So yesterday, with fear comes bonds. We lost 59,000 in open interest. Boy, we sure scared some shorts out of this market yesterday, didn't we? Taking a look at the 30-minute. So yeah, we scared some shorts out of this market for sure. Overnight, we got too short. London session came in, reconciled. We've opened in range and value. I'm going to be looking for extremes set not only yesterday, but from today's session to look for opportunities. Stay patient. And just a brief look here into the nat gas. Okay, still really looking at some historical research and before looking to formulate weekly kickoff levels. Those weekly kickoff levels are very important to me, and I want to make sure that I'm providing you with a quality areas to look for opportunities. So just getting into the research in the nat gas, just looking at the 30-minute chart. We have the market really opening outside of value and range. So we've established a bit of a gap. It looks like the market attempted to close the gap, was unable to do so. So this becomes a resistance area. If we come in and we close the gap and we get back into range and or value from yesterday, all bets for shorts are off. We were unable to close the gap. When we can't close the gap relatively early, what do? We trade in the direction of the gap. We look for opportunities for shorts. All right, so just a kind of a brief look at those two, because I know we've got very little time here. We've just have the opening of the equities markets just now. I'll see you at 12:30 for futures trading 301. And again tomorrow, same time, and we'll give a little bit of time between there for the FOMC release in case folks want to do anything. I'm going to take my deep breath. Stay humble, grateful, and creative in your trading today. Get out there and profit. I'll see you. Oh wait, we do have the coach's playbook today at 11:30, so we'll be doing that live. And again, I will look forward to seeing you there. Trade well, get out there and profit. I'll see you in the pit in a couple of minutes. Have a good day.